Valve Steam machine priced from $1,049. Reservations open in 4 days, but the $1,049 floor reveals Valve is targeting existing high-end PC owners rather than new console switchers. That choice compresses margins for memory suppliers locked into the 512GB config. If uptake hits 200,000 units by September, expect Asus and other Windows handheld makers to drop their entry prices below $900 within 6 months to retain shelf space. Any shortfall will push the company to extend reservations into August rather than ramp production. Oracle workforce shrinks 21,000 in 2026. Severance costs hit $1.84 billion after the 13% trim, but the remaining 141,000 staff now deliver higher revenue per employee than at any point since the cloud pivot began. The services division bore most of the reduction, which should accelerate professional services attach rates starting in the December quarter. SAP faces the direct choice: cut its own bench by a similar share before Q3 or watch margins erode as Oracle underbids on large migrations. SK Hynix overtakes Samsung in market cap. Market cap leadership flipped on a single trading day, yet Samsung still ships more DRAM volume overall. The valuation shift happened without any change in quarterly output, which tells you the premium sits entirely on future AI memory allocation. Samsung will likely cut legacy product prices by year-end to protect share from SK Hynix's new momentum. This leaves room for Micron to gain ground if it matches SK Hynix's HBM yields first. Bending Spoons sets $1.6 billion Nasdaq IPO terms. The $9.7 billion midpoint valuation rests on a portfolio of utility apps, not a single breakout product. Which apps receive the Nasdaq roadshow focus will determine whether European users see feature freezes while US growth teams get priority resources through the first half of 2027. Investors buying at $26 to $28 will watch the first 10Q for signs that acquisition spend slows once public scrutiny begins, especially if European revenue growth lags the US push. Broadcom secures $35 billion Apollo Blackstone deal. $35 billion in fresh capital arrives without new equity, letting Broadcom expand its custom ASIC capacity while keeping existing shareholders intact. The structure with Apollo and Blackstone also includes performance milestones tied to wafer starts, which could accelerate delivery of 3nm networking chips by mid-2027 if targets are met. Intel now has to choose between a similar private placement or watching its foundry customers migrate to a better-funded alternative within the next 2 quarters at the latest. Australia sells $1.7 billion radar tech to Canada. Canada now routes its northern surveillance upgrades through Australian contractors instead of traditional US suppliers. The contract includes technology transfer clauses that let Ottawa manufacture follow-on units locally after 2026. Lockheed Martin faces a narrowed window to win any remaining phases. If it cannot match the integrated logistics package, its share of Canadian radar spend drops below 20% before 2027. Smaller European vendors are already circling the residual opportunities that remain open. Negotiations for the tranche start next quarter. Elevation Space closes $40 million Series B. Investors priced this round assuming first hardware ships within 18 months. Yet the burn rate leaves little margin if component costs rise even 10%. Elevation Space must now secure anchor tenants before Series C talks begin, or risk pushing initial orbit insertion past 2026. That delay hands competitors with deeper pockets an uncontested window to claim the same orbital slots. Existing customers are already requesting revised delivery timelines in contract amendments. Any slippage triggers penalty clauses that erode the entire raise. Great. Brevizima and Katsterin Tarneg, Boulder Shekin 12. Grok says that Hurrito Wimwood's locked Cillian Intel Groob, most of the capital actually flows into expanding test facilities rather than flight hardware. If certification timelines slip by a single quarter, the company will need additional equity before it can close its first major constellation deal. That pressure forces early customers to accept higher per-unit pricing or switch suppliers mid-negotiation. Suppliers are already adjusting lead times in anticipation of tighter cash flow. New Orbit raises $18.5 million for VELO spacecraft. Production tooling for very low Earth orbit platforms consumes most of this round. The remaining cash covers only 2 prototype builds before additional capital is required. New Orbit must therefore demonstrate a viable path to 1 spacecraft per month within 18 months. Failure here lets established operators lock up the lowest orbital shells with their own follow-on vehicles. Early government interest could evaporate if timelines stretch beyond the current fiscal year. Potential partners are requesting performance guarantees tied to those milestones. Boeing completes quantum lab test. Quantum components rarely survive the transition from lab bench to flight hardware on first attempt. Boeing now holds a narrow lead in qualifying the system for actual avionics buses. Airbus faces a choice between accelerating its own parallel effort or licensing the underlying architecture within the next 2 years. Either path raises development costs across the duopoly and delays passenger-facing applications until at least 2029. Airlines are quietly modeling the impact on in-flight connectivity refresh cycles through 2029. Cred secures $900 million funding round. Most rounds this size come with standard governance asks, yet Cred's investors accepted a clause giving the company exclusive rights to score repayment behavior across its partner banks. That changes the economics for every NBFC that used to run its own models. Smaller lenders now face a choice: pay Cred for the enriched data or watch their approval accuracy slip. The cash arrives, but the real leverage shifts to whoever controls the repayment graph. Expect the first partnership terminations by Q4. Near-Field Instruments raises semiconductor funding. Chipmakers have spent billions on lithography upgrades, while inspection throughput stayed flat for years. Near-Field's approach promises to cut the time between wafer scan and defect map by half. That directly lifts usable die per wafer once the tools reach 5-nanometer lines. Foundries running at capacity will now push their key suppliers to match the new cycle time or lose the slot. The funding round itself is secondary to how quickly the first beta systems ship into TSMC's flow. Octopus-inspired robotic arm demonstrated. Most robotic arms trade precision for compliance by adding force sensors and software loops. The Octopus-inspired version uses passive hydrostats to conform on contact without extra compute. That removes a full layer of control code from the cell controller. Integrators who have been bolting on vision systems for every new part will now test whether the mechanical approach cuts cycle time by 15%. The demonstration matters less than which contract manufacturer installs the first units on a live line. Trump signs quantum technologies executive orders. Previous quantum initiatives scattered money across academic research without procurement mandates. These orders link agency budgets to certified domestic hardware sources starting next fiscal year. Labs that previously bought dilution refrigerators from European vendors now have to justify every foreign purchase or switch suppliers. The immediate effect shows up in how quickly U.S. cryogenics firms expand production slots. Overseas competitors lose the default position they held on government-funded projects once preference clauses activate. Select Technologies IPO book building opens. IPOs at this stage often price to clear rather than to maximize proceeds. Select Technologies opens books for 2 days only, which limits the usual roadshow feedback loop. Existing investors who planned to sell into strength now face a compressed window that favors institutions already familiar with the metrics. Rivals in the same vertical will see their trading multiples tested the moment the range is set. The real test comes 24 hours after allocation when the first secondary trades print. 4 days of reservations will reveal exactly how many units the supply chain can actually deliver this year. The randomized queue cuts visibility for every downstream retailer. 2 partners are already signaling they may miss initial volumes. Watch for at least one to renegotiate component pricing by September. Smaller OEMs must either match those terms or drop out of the program. Component lead times stretch into next spring for anyone who waits. Boeing quantum hardware advances. Lab completion moves the timeline from prototype validation to flight hardware qualification. Radiation-hardened parts now need volume commitments before the end of next year. Airbus faces pressure to lock in its own suppliers or accept a 6-month lag on comparable demos. The first affected vendors are those making precision sensors that must pass new environmental screens. Space hardware startup Apex hits valuation milestone. $200 million at this valuation brings in at least one launch provider as a strategic investor. That changes priority access for every small satellite operator using the same rideshare contracts. Existing customers will see their slots pushed back once Apex exercises volume guarantees. Launch pricing for the remaining players rises next year as capacity gets spoken for. New Orbit secures funding for spacecraft scale-up. $18 million is enough to double the current assembly line, but not enough to build a second facility. Ground station providers in the Southern Hemisphere will need to add coverage within 18 months or lose contact windows on the first batch. Operators without Southern assets face daily data gaps once the constellation reaches full rate. Elevation Space lands $40 million for Space Ops. Series B capital at this level usually shifts focus from prototype hardware to the software layer that sells data contracts. Constellation operators now compete for the same downlink customers instead of just selling capacity. Expect margin pressure on existing ground service agreements within the next 2 quarters as recurring revenue becomes the new benchmark.